Here's another stock we'll be watching today, Boeing. Those shares are down in the pre-market. Now they're down now by 7.2% after a panel blew out on a brand new Alaska Airlines jet mid-flight on Friday, resulting in a temporary grounding of some 737 MAX jets. For more on this topic, we're joined now by Bloomberg's global editorial leader in aviation, Benedict Campbell. Benedict, thank you very much for joining us. What are the latest developments in the Boeing story? We understand now that that panel that very distressingly came off the aircraft in mid-flight has been found, correct?
That's absolutely right. They have found the panel. It was lying in the backyard of a local person near where the aircraft landed again. They've also found some phones that got sucked out of the aircraft that miraculously still seem to work. But really the focus now turns to that panel, how it came loose, what was sort of the manufacturing defect, as it were, how this could have happened. The NTSB, that's the authority that's investigating this, they gave a fairly detailed press conference both on Saturday and then again last night with some really harrowing detail on sort of the moments when this happened, about the rapid loss in pressure, and the NTSB really stressing how lucky everybody was to escape this alive. There were more than 170 people on that aircraft, and the aircraft, as we know, landed safely again. But this could have taken a much more dramatic turn had the aircraft been at a higher altitude. The fact that it wasn't and that people were still in their seatbelts massively helped this, but things did get sucked out. The cockpit door did get sucked open, and this is a door that's normally fortified and closed. So that gives you a sense of the forces at work inside the aircraft as this panel came flying out.
And this is not certainly the first mechanical difficulty with the 737 jet at Boeing. Briefly remind us of the history of troubles with these aircraft, and then I'll give the next question to our featured guest, Patrick Horan.
Sure. So the 737, while obviously a very safe aircraft and it's flown all over the world, it's sort of the sister aircraft, as you will, to the Airbus A320. It has had a difficult history in the last couple of years. There were those two crashes almost 5 years ago that led to the temporary grounding of the 737 MAX fleet. But since then, they sort of returned the aircraft to safe operations. Last year, however, we did see some defects. There were misaligned drilling holes in the back end of one aircraft. There were some loose bolts. And while none of this was as serious as the panel that came flying out, they did sort of point to some problems in the manufacturing process at Airbus and at their supplier Spirit. You mentioned the Boeing shares this morning taking a tumble, Spirit down even more. And that relationship between Spirit and Boeing, Spirit makes the fuselage for this aircraft. That's something that will be very closely scrutinized. Who made what, at which point, was the handover, what kind of documentation exists. Those are all things that will be very closely scrutinized by the NTSB. At this point, really too early to speculate, and the NTSB is really not given to speculation. These are very hard-nosed people taking a very hard look at what's going on. They have their forensic people on site. So really, we're very early on in the whole investigation at this point.
I understand that this particular aircraft has had some troubles and was in for maintenance. I'm wondering what you make of the probability, at least, that this might be third-party related, that something was overlooked given it was a new airplane, and this might be a bit of a red herring.
So you're right that there were some issues on this aircraft, and as you say, it's important to point out this was a brand new aircraft. It was only delivered it started operating in November, had about 150 cycles, flight cycles, which is really nothing. So a factory fresh aircraft, and that I think is a very important point of departure here. This was not an old aircraft which might have had some kind of fatigue. The point that you're mentioning is the lights, the pressure lights that had come on a couple of days before the actual incident, and that's something that the NTSB is also exploring. Why is it that these lights came on? Was the reaction done properly? What kind of revelations might that lead to? The plane was taken out of long-distance travel, i.e. places like Hawaii, because of those lights that went off, and there was a plan to do a deeper dive into the cause of this alert, but it never came to that because the next thing that happened was for that panel to fly out. So the chronology of from handover, whose hands was it in, to operations, to possible, I wouldn't call it tampering, but sort of at what point was any kind of maintenance performed on the aircraft, that's something that the NTSB will take a very, very close look at. Boeing is obviously supporting that effort, as is Spirit, but for the time being, the 737 MAX 9 fleet, most of it at least around the globe, is grounded.
Benedict, thank you very much for your insight into an important story being watched obviously around the world today, the latest mishap with a Boeing 737 aircraft.
Well, the loonie is pulling back today against its U.S. counterpart as investors brace for inflation reports out of the U.S. We'll also see some earnings start later this week with the big U.S. banks officially, unofficially kicking off the earnings season. Well, our next guest believes the Canadian dollar is fundamentally overvalued at the moment, and this month is most likely to be more positive for the U.S. dollar. For more on his outlook for currencies, we're joined by Sean Osborne. He's a managing director and chief foreign exchange strategist at Scotiabank. Sean, thanks so much for coming in.
Pleasure.
So you see the Canadian dollar as overvalued right now. Why is that?
Well, we had a big sell-off in the US dollar late last year. I think we're kind of in correction mode for the moment. And seasonally, the US dollar typically does quite well this time of year. So I think a combination of kind of technical factors with the US dollar getting heavily sold late last year, seasonal factors, and the Canadian dollar really moving a bit more than kind of underlying fundamentals would have suggested. Spreads have moved a little bit in the Canadian dollar's favor. Equity markets have picked up a little bit, but I think the US dollar sell-off that we saw through Q4 last year was really a little bit overzealous, overdone. We priced in a lot in terms of bad news for the US economy and interest rates, and now essentially we're seeing a bit of a correction in that, and that could run on for the next few weeks here, I think.
So that change in the fourth quarter, with the expectations that those interest rates would be interest rate cuts would be coming, that was influencing the US dollar?
Yeah, I think the build-up of expectation that we'd see a March rate cut. Late last year, we priced in almost a full 25 basis point rate cut at the March FOMC. We had the kind of concession from Chairman Powell that the FOMC were talking about cutting interest rates.
Right.
So that was a kind of cue for markets to really sort of look at this as a very realistic possibility. And we priced in, as I say, 25 basis points, more or less, into the swaps curve for March. Now we're back down to around 15 basis points of rate cuts priced in. So we've priced out 10, 12 basis points of rate hikes, rate cuts for the March meeting. And the US dollar has rebounded essentially because of that.
It's interesting to look at the Canadian dollar over the past year, and we're essentially trading around the spot where we were this time last year, right? Yeah. But I mean, a lot happened between then and now. And the factors influencing it, you highlighted that they've been shifting. Yeah. So how have they shifted?
Well, I think, the US dollar last year was really classically strong, I'd say, for the US dollar. It was a story of, particularly in the second half of the year, higher interest rates, stronger growth than expected. Interest rate increases kept running on more than anywhere close to anyone expected at the start of the year. So the US dollar really did benefit from that. And the story of US exceptionalism, stronger growth, higher interest rates relative to the rest of the world was really the power behind the dollar's strength. The Canadian dollar didn't really benefit from the kind of classic sort of Canadian dollar drivers. We've seen a bit of a detachment in the Canadian dollar from crude oil prices recently. It's become a little bit more attached to risk appetite and interest rate differentials. And I think that probably will continue in the near term here. So the CAD did relatively well compared to most of its sort of G10 peers. It got a bit of a ride along with the US dollar to a large extent last year. It appreciated against the euro, against the yen, and against the pound sterling, but it didn't do that well against the US dollar.
I think we've got one of your graphs that shows some of those factors and how they've changed over a 3-month period that we can bring up. But when you're talking about, there it is, when you're talking about the risk appetite and the Canadian dollar being sort of in line with that, why do you think that is, and why do you think it's going to continue?
It's a good question. It's a great question because clients often ask us, what is driving. We use this chart a lot in our publications to try and illustrate how these variables change over time. So the Canadian dollar, it's a commodity. We're a resource-based economy. We're still, heavily influenced by the commodity story. We're a kind of a high beta currency in the sense that we're very closely associated with global growth. Equity markets are kind of a proxy for the global growth outlook. So higher stocks generally mean a more positive environment for the Canadian dollar. Lower stocks generally mean the opposite. So weaker equities generally get us a weaker Canadian dollar. Stronger stocks usually get us a relatively stronger Canadian dollar.
So how do you see this year playing out? If that continues to sort of ring true, but then also the expectations for these interest rate cuts.
Yeah.
The central bank in this country and in the U.S., the path might be similar, but it might not be the same. How could that potentially influence things?
Exactly that. I think, we're looking at a situation where if you look historically between the Fed and the Bank of Canada, interest rates generally move at more or less the same speed and in the same direction over time. But there is a fair degree of variance between when these cycles start and finish. Our call is for around 150 basis points of rate cuts from the Fed. This year?
This year.
This year.
Okay.
Yeah, but only 100 basis points from the Bank of Canada. So we have a sticky inflation problem here. We've started to see, as I said earlier, concessions from Fed policymakers that maybe they're starting to think about when they can cut rates now. We're seeing nothing of the sort from the Bank of Canada. We have a meeting coming up at the end of the month. I expect, a fairly measured statement from the bank that gives no concession to the outlook for rate cuts at this point. We had some soft jobs numbers last Friday, but within those job numbers was a very high wage growth number. And I think the Bank of Canada's made it pretty clear that that's something that they need to get a handle on before they can even think about the outlook for decreasing or relaxing monetary policy at this point. So we see slightly fewer, slightly slower rate cuts in Canada, narrower rate spreads. We can already see that short-term rate differentials are starting to move back in the Canadian dollar's favour. There's still an interest rate premium for the US dollar at this point, around 30 basis points at the short end of the curve. But that probably should disappear. We expect the overnight rate in Canada to reach 4% at the end of this year, and that'll be around about the same point as the Fed funds target rate, 4% by the end of this year. So
right, of course.
Essentially no difference in short-term rates between the US and Canada. So no rate premium for the US dollar, not necessarily a rate premium for Canada either, but the fact that we don't have a rate discount here in Canada should give the Canadian dollar a bit of a lift.
Very, very quickly, Sean, this time next year then, what do you think for the Canadian dollar?
We're about where we should be right now, I think, in terms of underlying fundamentals. So 74, 75 cents is probably about where we should be. Okay. We may see a bit more softness in the short run, maybe another cent or so. At the end of this year, we're probably going to be trading close to 78 cents, I think.
78? Mm-hmm. Okay. Interesting stuff, Sean. Thanks so much for joining us. Really appreciate it. That was Sean Osborne. He's a managing director and chief foreign exchange strategist at Scotiabank.
This is Bloomberg Markets. I'm John Ehrlichman. Bitcoin's been dominating the headlines over the last day after a highly anticipated decision by the U.S. Securities and Exchange Commission on whether to approve a spot Bitcoin ETF stateside morphed into a major cybersecurity incident. The SEC's account on X, formerly Twitter, was compromised, and a fake post claiming the agency had greenlit plans for new products fueled a brief surge in Bitcoin's price. It also sparked an investigation by U.S. authorities into how a social media account at Wall Street's main regulator was compromised. Meanwhile, that immediate move we saw in Bitcoin, which is continuing to climb at this hour, was based on some built-up hype. Traders have been speculating for weeks that the agency could approve several products as soon as today. So we'll watch for more on this new investigation and certainly continue to watch the approval story. There does seem to be consensus that at least with some of these funds, assuming there is approval, it could be a record-breaking event in the ETF world. And according to our next guest, it could be a watershed moment for Bitcoin itself as far as institutional investing is concerned. For more on the implications of the decision, we're joined by Jeff Kendrick. He is head of FX and digital assets research at Standard Chartered. Jeff, thanks very much for joining us. First of all, I guess with this this fresh investigation based on what happened on X overnight, does that change the approval process in your view? I guess a lot of people thought we would have some kind of announcement as soon as today.
I can't really see it changing the announcement process. That, for me, was more of an internal SEC issue, if you like, because it sounds like there was a two-factor authentication not done. So I'd be very surprised if that impacted how the SEC goes through their approval process. That's obviously a much more detailed, rigorous process that they have in place there. So I think we will get the ETFs approved today. There should be a number of them approved today, and I think that sets up the bigger picture story, as per my note earlier this week, which is that this is now the watershed moment that people have been waiting for in crypto space for quite a number of years now, really.
So the general math on that, and you can give me your perspective, is that if you have these products, ETF-related products, a lot of people already buy all sorts of ETFs. If you see a lot more Wall Street money, Bay Street money, global institutional money that's coming into these products, that it lends credibility to crypto or Bitcoin as an asset class. Is it more than that?
In the short term, it's more a flow of funds argument, if I'm honest with you. So this opens up the 401k market in the US, which is huge. There's been built up or pent up demand, if you like, for a number of years now. You had the futures-based ETF in the US. A couple of years ago, you have ETFs in other countries like Canada, for example. But in the US, that sort of 401k type market has been unable to access digital assets over the last few years, despite wanting to. And it's likely to come at a stage right now where you have large demand, but supply. So if you look at what happens to how often coins move in Bitcoin, supply on that metric is very, very tight. So supply is inelastic. Demand looks like it's going to be very strong. And so if you do get large inflows, which I anticipate somewhere between $50 and $100 billion of inflows to the ETFs this year, that could have a huge price impact. Yeah, so large demand when the price curve on the supply side is very inelastic should be a huge upside just in terms of flow. As you mentioned, it also has that secondary impact of somewhat legitimizing the industry in the eyes of the general public as well. So when 401k money can invest, and then probably down the track we'll also start to get some proactive regulation in the US, which we've had in Europe over the past 12 months already, but the US may now catch up after the spot ETFs are approved as well.
And so, Jeff, you have a pretty bullish call when it comes to your outlook for Bitcoin. What are your expectations going forward?
So I'm calling it for $100,000 this year. Now, I called that first in last April when we were trading about 25,000. To be honest, people thought I was a little bit crazy at that time, calling for 100,000 by the end of 2024. I think that looks very achievable now, considering this ETF story has been brought forward to hopefully today. Next year, I think we could even go as high as $200,000, and that's on the back of these ETF inflows. To come up with that number, I looked at what happened with gold prices after the first US-based gold ETF was introduced in November 2004. Now, that was a slower moving animal. It took about 7 or 8 years, but the gold price ultimately, on the back of ETF inflows, multiplied by 4.3 times. If you go up by 4.3 times from where we are right now, that gets you to roughly that $200,000 level. I think in Bitcoin, that happens over 2 years rather than 7 or 8 because it's a faster moving market. And I suspect that is where we can go in a reasonable time horizon now.
Jeff, as you know, some of the most high-profile critics of crypto, Warren Buffett would be a good example, have said, where's the value? In his opinion, the value right now for anyone who is investing is in the proposition of someone at a later date being willing to pay more than what you're paying today. There has been a conversation around cryptocurrencies and Bitcoin as the future of digital payments, but we are still waiting to see more adoption on that front. So does Bitcoin have to have more real-world use cases to really reach some of those longer-term targets?
Not yet. So the point of investing in Bitcoin for me right now is it's the purest expression of investing in blockchain technology. Now, it's very unlikely that Bitcoin will be used for over-the-counter payments anytime soon, given transaction costs, etc. But blockchain as a concept has now unleashed the broader universe, and most knowably on the Ethereum side, on the smart contract side. On that side of things, you will very soon start to get real-world applications. The gaming market globally is worth about $300 billion. In a couple of years, I'd say most of that will have moved on to Ethereum. Tokenization, you'll have T+0 type settlements come into financial markets, which will also go onto the Ethereum blockchain. Banks like ours are already looking at solutions like that. And so the point of Bitcoin is it opens up that blockchain investment horizon. And within that horizon are other very large real-world use cases. So think about Uber versus cabs type example in countries around the world now. You'll start to see some of those come through in the next couple of years, but it's under the radar is where blockchain has its effect. So rather than AI, which was hot in 2023, so everyone has a view on that because it's kind of in your face, blockchain technology will come via the back door, if you like, and in a couple of years from now, there'll be a lot of those real-world use cases that people, quite frankly, hadn't even thought of.
Jeff, good to get your perspective. Thanks for joining us. Jeff Kendrick is head of FX and digital assets research at Standard Charter.
Taxi Vehicle is a Montreal-based ride-hailing operator, and it runs a fleet of 25 Chinese-built electric vehicles. And the company plans to soon add 8 Vietnamese-built VinFast EVs. For more, we're joined by Young Kwong. He is president of Vaco Taxi. Thanks very much indeed for coming on the show. We read your interview with iPolitics.ca. It was fascinating. Tell us a bit about the company, though. You find obviously big advantages with these Chinese-built EVs.
Yes, first of all, thank you very much for your invitations. Okay, let's go back 6 years ago. We didn't have any EV in Canada, in Quebec, particularly in Quebec. So I went to China because I believe in the BYD E6 is built for the taxi and for the policeman use. That's why I convinced them to bring some into Canada. We got the deal for 2,000 BYD E6 in Canada. The first 25 came in November 2019. Unfortunately, the pandemic came. We had to stop, and we didn't know how long it's going to last. So BYD, they cannot wait so long. They have to take up the infrastructure to build up another model. That's why we stopped the project with BYD since 3 years ago.
And how do you buy them? Like, there isn't a dealer network, so you just have to arrange the import yourself, or how does that work?
Its work is very simple. I have I'm a mechanic long time ago. Okay, I know the mechanic very good. So we need to convince the BYD to bring the car into Canada, and I will take care of everything. So they accept to bring in. We homologate the BYD E6 to Canada. So they have the facility in the United States and in Ontario, you know that. So for the parts and for everything, we have no problem. And the BYD, they trained 2 technicians in Montreal to get the car fixed and everything. It's the same thing for the buses. You know, BYD has sold some buses to the like a TTC in Ontario here. Yes. With the STM and also with RTM. They also have some electrical buses here. So they have a special technician working for the buses here in Montreal, Quebec. And also these gentlemen can also, fix the electrical problem for the BYD E6. We never have any problem. The car has been, the 25 units have been running in Montreal for the last 2 winters. Everything is working good. That's for sure. We always have some mechanic to fix, but we have 2 garages to get them fixed. We have parts, we have everything. We don't have any problem on that.
Before we let you go, you have a warning here. You say that Canada and America were kind of 10 years behind China in electric vehicles. We have a lot of catching up to do.
I was very surprised. Before, I always believed that in Quebec we were the first one because we have the ITO electricity and everything. Am I right? Am I wrong? So when I went to China and I got the contact with the Chinese people over there, I was very surprised. They are so advancing if you compare with the Canadian about the EV, about electrical car and electrical buses. They are so advancing we cannot follow them. First, in the shop is completely automated. In 90 minutes they can build up one car coming out to the market.
90 minutes.
90 minutes for assembly. It's very fast. Everything is fast. Everything is automated inside the shop. The paint installation and everything. The human just only the little work do it by the humans. Let's take an example. Tidying up the 4-volt for the battery, two gentlemen side by side to install this thing here. All the door, everything is automate, everything automate, it's fast, everything is fast. So also they have the technology, we don't have it. And this car here, BYD E6 has been running in China and around the world in 55 cities since more than 12 years.
There are a couple of major points in the fight to get a Bitcoin spot ETF in the U.S. 10 years ago, of course, with the first submission. And then August 2023, a pivotal lawsuit against the SEC by Grayscale that wanted to convert its trust into an ETF. Ultimately, Grayscale won, and this paved the way for what we saw yesterday, 11 ETFs that track spot Bitcoin in the United States. Craig Somm, Chief Legal Officer at Grayscale Investments. Craig, they were so quick to look at the future already and the market action today. But let's just take a moment and what was accomplished and what sort of happened because of that lawsuit, and what, how did you mark the occasion?
Well, Amber, it was a very, very positive vibe at the Grayscale office, needless to say. Yesterday, we actually spent the day down at the New York Stock Exchange for the first day of trading. GBTC started trading at 4 a.m. It was the first Bitcoin ETF to start trading. And it's really the culmination of 10 years of hard work of starting GBTC in 2013 as just a private placement, ultimately uplisting it as an ETF as we planned, as we told the market we would do. Yesterday, we did that. It's a big day for GBTC, its shareholders, and really the whole Bitcoin and crypto communities overall.
All right. It's not all sunshine and roses, though, because there's a lot of flow tracking that suggests that people perhaps were moving out of Grayscale and into some of these other funds.
So yesterday, GBTC traded over $2 billion of daily trading volume. It was the most highly traded Bitcoin ETF of all of the other firms. Just the day before, it actually traded $600 million. So just to show the massive increase in trading volume and liquidity is really a reflection of how GBTC will continue to be a premium product for investors now that it is an ETF. It's the largest Bitcoin fund in the world with nearly $30 billion of AUM. It's also the second largest commodity-based ETF in the world as well. So I think that value proposition is going to be really positive for investors. And today is just day 2 of trading, and so we're looking forward to seeing trading volume and flows as well.
Well, but that's my question. Is it all that volume, was that into or out of? Because one of the things, and I know you get this question a lot, is the fees. Everybody's going low, and you guys are maintaining north of 1%.
We'll be reporting our flows over the course of the days. In terms of the fee, that's right. So we have always been announcing that we would be lowering our management fee upon uplisting GBTC as an ETF. Earlier this week, in connection with our final S3 that we filed, we reduced that fee by 25%. And so we were very happy to announce that. Other Bitcoin ETFs, there's going to be a lot of different variables that investors look to when they're considering which one they're going to invest in. Fee is certainly one of those components. Size, liquidity, trading volume, the track record that we have is also going to be one of those components. You have Grayscale, a real crypto specialist that's been doing this for nearly a decade. I think those are all important variables that investors should consider as they're deciding which Bitcoin ETF to invest in to make their allocation. So
are you saying that the major large players like BlackRock or Invesco, which partnered with Galaxy, they're not as adept to maybe track? Ultimately, that's what it's about, right? You want to mimic and track the price of Bitcoin as close as possible?
The ETF absolutely should be tracking the price of Bitcoin. But when you're talking about digital currencies, cryptocurrencies, there's a lot of different nuance and different niche features about it that can make it complicated for an asset manager to handle it. Things like memory space in the blockchain, or how to fit it within the accounting ledgers of traditional finance. Bitcoin, for example, goes down to the 100 millionth decimal place. And those are kind of the quirks of the asset class that we've been able to figure out over these last 10 years. Things like forks and airdrops. So I think when you're managing digital currencies, you want to go with a specialist when you're going to make your allocation.
We're also focused on what's next, the new products, plans for a covered call ETF in this space. Do you think we'll see things like levered, 2 times levered products when it comes to Bitcoin, given that the SEC, certainly some members, are still quite hostile to crypto?
Yes, I mean, I think all of those things are certainly possible. One of the other added benefits with an ETF is now you can have listed options. And so we are focused on building out that ecosystem around GBTC so that investors can interact with it in different ways. So we did make a filing yesterday. I can't speak to anything other than the fact that we did make that filing, but that is certainly an area of focus for us. I'll also say that we have 16 other crypto asset products. We have Grayscale Bitcoin Trust, of course, that we've proven we can bring through the 4-stage product lifecycle of starting as an ETF, obtaining a public quotation on OTC markets, becoming SEC reporting, and then uplisting as an ETF. We have also filed for our Grayscale Ethereum Trust, which trades under ETHE, to uplist as an ETF as well. That 19B4 filing was filed last year, and we're looking forward to engaging with the commission on that.
Well, that's my question. Did this create a blueprint in any way for a straighter line forward for an ETH ETF?
There's going to be different facts and circumstances for different digital assets. If you look at the approval order that came out earlier this week that approved the 19B4s for all spot Bitcoin ETFs, the commission was focused on the fact that you have a CME Bitcoin futures market, which is regulated and has surveillance, along with the correlation of that market to the underlying spot Bitcoin market. That's actually the case that we made before the DC circuit, that you have a Bitcoin futures market, which is derivative of the spot Bitcoin market. And so if you're comfortable with the Bitcoin futures market, you should also be comfortable with the spot Bitcoin market because of that correlation and the fact that the surveillance on the CME can detect things like fraud or manipulation. We also have Ethereum futures on the CME. And so to me, that's a very similar set of facts and circumstances. But again, something we'll have to engage with the commission on as we're going through that 19B4 filing process. How
are relations with the commission these days?
We've always had a mutually respectful and good engagement with the SEC. GBTC as an example, when we filed to have that product become an SEC reporting company, that's where we're engaging with CorpFin, working on disclosures. And we've always been getting very thoughtful questions about the asset class, how it trades, how market participants interact with it, things like custody. So, we've always had a very open and constructive dialogue with the commission, and looking forward to continuing that with our Ethereum Trust as well.
I guess I'm trying to get a sense of, has it softened a little bit now that this has happened? Or, reading some of the commissioners, certainly the ones that were opposed, one of their key concerns is that this is a bit of a watershed moment. And they're clear that just because they've accepted this, they don't endorse Bitcoin, but also they're worried about future products.
I think that's a reflection of the commission's mission. They're not endorsing any one product. They're just making sure that disclosures are full and fair. The product can trade in an orderly and efficient manner, not susceptible to things like fraud or manipulation. And the fact that you saw several registration statements so effective and the 19B4s all be approved this week shows that a Bitcoin ETF has proven that it can do that. With other crypto assets, you're going to have to go through that same process. And so again, I'll say it has always been a very thoughtful, constructive engagement with the commission. With this asset class, it's certainly a difficult job for any regulator, where on the one end, you want to make sure that you're allowing for capital formation and the innovation to flourish, while also protecting investors and consumers alongside that.
All right, Craig, we got to leave it there. Thanks so much for joining us with this perspective. That's Craig Sam joining us from Grayscale.